Hey, Simon.
Hi, how you doing?
I'm good, thanks. Where about you based then, Simon?
I'm in central London. Yeah,
Yes,
yeah.
hello, but I'm from Madrid, not Barcelona.
Oh, yes,
Madrid.
Madrid. My apologies, Gabriella.
Hey Gary, how you doing? Hi everyone. So Simon, are you an investor or in the crypto space yourself?
Yeah, I've been invested in Bitcoin
What's the
for the
sound?
last 10
Bear
years.
with me a minute.
Yeah. I've been in and out a bit with the cycles, but yeah, first got into it quite a long time ago.
That
Um,
is a long time ago. Yeah, you're definitely an early adopter.
Can
Well, we're all early adopters, but you were like super early adopter.
yeah, I mean, we are still early now. Yeah, I mean, I didn't really kind of learn about it properly at the time. I really wish I had done, but yeah, the last couple of years I've really gone down the rabbit hole and understood, the intrinsic value. But for a long time it was just a speculative thing, really.
Can you hear us at all, Gary?
I can now. Yeah.
We can
So
hear you perfectly now as well.
yeah,
Yeah,
yeah.
yeah.
JT, I can hear you now. And see, we've just been joined by Elena as well, who's missing out on the fun of me having technical problems, which is first time I've had any issues with sound on this till now. So I must have fiddled with something. Never mind.
Well, I told you, use relays.
Yeah. But
There you
maybe,
go.
well, to tell you, JT, as well. I'm trying to encourage people to do the gone in 180 seconds pitches, where you get to spend 3 minutes talking about your project. We'll get you to do that if you want about relays shortly.
Yeah, I can give you an update, of course.
Yeah, yeah. If I, why don't you share with us now just what you're up to and what relays is about? I've heard some of it before, but it'd be great to get an update.
Yeah, sure. A very bad place to give the update on Zoom because, majority of platforms, communication platforms these days are not really safe. As we all know, anything that is not decentralized as a central authority, that central authority is companies, institutions, governments, as we know, right? So it's always a trust me, bro encryption end to end, black boxes on the apps. We don't really know what's going on there, right? So relays, what it relays is really a ultra secure, just privacy focused. And of course, that means censorship resistant, decentralized communications network. So it is a super secure decentralized communications network. The relays network is called RelayNet, yeah, and it has been meticulously designed really for Web3. So the first DApp is Relays Meet, video conferencing tool. Yeah, the stage that we are at the moment is people are running nodes. We have about 40 nodes running, so you can run a node. You can just go download Linux, Windows, Mac, run the agent, and you become a proud contributor of a node to our test net. And of course, you get rewarded our token for doing that. So that's one part of the decentralization. The other part is that we actually move encryption to on-chain. So no more of that trust me, bro. We have end-to-end encryption. It's fully verifiable on-chain on the smart contracts. It's a multi-chain strategy. So our network is not blockchain. I have to emphasize that. Yeah, but all the smart contracts are built on a multi-chain strategy. So what that means is fully verifiable. Yeah, the network does need to be blockchain. Our network, yeah, because it's really what the nodes are doing is routing the conference calls around the world and providing bandwidth and key management. So those are the three things that nodes do. Many people don't know that, for example, in Zoom, the call we are having, they have it happens aside Google Meet, etc. All of them, all the stream of the calls goes through their own network. Yeah, it goes through their servers. Their servers are centralized. You've heard all the stories about Zoom having AI reading, and Google does the same. It reads all the messages, all your emails. You actually have to agree with the terms and conditions. Yeah.
Yep.
So, so take a risk. Basically, many things could happen with your information. Being a corporation means data, means IP, means research people are doing. All of that can be captured. We just don't know. So By decentralizing encryption to on-chain means when the stream goes through the nodes, it's already encrypted, so there's nothing they can do. Yeah, currently on current systems, Web2 systems, because it's a centralized authority, anything can happen. Yeah, they can capture pretty much every single byte of a video conversation. So where we are today, testnet, going out with the invite program for node operators, going out soon with the invite program for users. The more calls you do on Relays Meet, you know, the better rewards you're going to get, all that type of stuff, like many projects did, Arkham Intelligence, Blur.io, etc., etc. So we're going to do the same go-to-market strategy now. So that's where we are today.
Sounds good. I guess while people are on, it might be worth just opening it up and ask if anyone's got any questions about that, because it's a particularly interesting project.
Come on, guys, don't be shy.
Not yet.
Not yet. Elena's just letting it sink in. Elena will wait until probably 1 minute before the finish and say, just a quick question. Right,
I've seen that before.
Yeah, right at the beginning, what you said was, yeah. So it certainly sounds fascinating, and
It's not, by the way, it's not just video conference. Anything communication, video, audio, text would mean messengers, our own version of Discord, etc. So we're gonna do the whole lot. What we have already is Relays Meet that you can start to use it. Have a go, try, guys. You know, you need to connect a wallet. The public keys of the wallets go to the smart contracts, derives a new key, distribute it back to the participants on the call, fully encrypted. Yeah.
And it's relays.io, isn't it?
Relays. Yeah, Relays.
So relayz.io. So you can check out. Oh, that's great. Thanks for sharing that. I see we've just been joined by King Tillian. Do you want to say hi?
Hi, everyone.
Hey, we're just kicking the session off. We're just doing general intros at the moment, so feel free to share who you are, where you are, what your interest is.
Right. I was on earlier on, but I think the reception was a bit bad, so I had to go out and come back in again. This is not my first time, really. I've been on the show for I think twice already. I'm a consultant within the infrastructure development, and asset management is my specialty. So roads, bridges, and I also have an interest in cryptocurrency and blockchain. So currently I'm looking to see how I can use blockchain to benefit my industry, which is engineering and infrastructure development, as well as looking at the cryptocurrency side of things, tokenizations and what have you.
Are you looking at things like digital twins and building information management and that kind of thing? Okay.
Yeah, IoTs and what have you.
Yeah.
Yep. So that's where I'm currently based in the Middle East. I'm all over the place, really. But recently, I came to the Middle East. Between Saudi and Qatar, and then BVI sometimes. Yeah. And there is this project going on that I would want to share. Bitcoin code mining. I have a friend who is into. I mean, he's the owner of this project going on. So I think I might share it as the discussion goes on.
Yeah, sure. Well, absolutely. It's always interesting, and it's fascinating as well that you're kind of at the cutting edge geographically with crypto and linking in for physical assets with being in the Middle East, because there's a lot of things. Certainly we hear about what's going on in Dubai, a little bit less with Saudi, but it's definitely a really interesting place. And Christopher, who comes on and joins the session sometimes as well, he has been doing some work with that region as well. So it sounds like a great area to be dealing with at the moment. So thanks for coming back.
Nice.
And in fact, unless anyone's got anything else that they want to immediately share, then maybe it'd be a good idea now for you to talk about the Bitcoin mining you were talking about.
Right. So This is a Bitcoin code, which has the same philosophy as Bitcoin, as in the real Bitcoin, right? It's something that is just been developed and is linked to the affiliate marketing as well. So you mine with NFTs and you get rewards within the affiliate market, and you make your earnings through the mining as well. I've got this. Hold on one second. Can I share my screen? Is it possible to share?
No, I tend not to do a screen sharing. If you want to send a link through, then I can pull a link up. So that's
Okay,
usually the
perfect.
easiest way. Yeah.
Let me send you some. I've got you on my WhatsApp anyway, so just going to send you this. But essentially, what it is it has the same philosophy as Bitcoin, as I said earlier on, and what you.
He's gone.
Oh,
I must have upset him when I said you can't show your screen.
He learned the hard way, I remember. People sharing stuff they shouldn't.
Yeah, exactly. It's you sometimes get people, you might remember yourselves in the earlier days, but you get people, oh yeah, I'm just a beginner, I'm just learning, blah blah blah. Let me show you this, and then all of a sudden it's like, that's probably not appropriate for this. So we do have certain standards to keep up to. So that's good. Yeah. Well, I think he's just lost his connection at the moment, so maybe he'll come back again. So we'll see how that goes. Let's pop back, Simon. I just wanted to come back because we were speaking right at the beginning. I was just curious to understand a bit more about where your kind of interest lies and what's exciting you about this world at the moment.
Yeah, I've been doing a lot of different things in the space. The thing that we've been working on recently is something called the CDR, Customer Deposit Registry, which is designed to help exchanges and custodians to make the assets that they're holding on behalf of their customers verifiable. So it's a system for customers to do a kind of spot check on the assets. So yeah, I can tell you about the technical side of it. It's not rocket science in itself. It's basically each custodian in the network will submit a file of their customers' balances encrypted. So no customer sensitive information is being given away. But they also show their public key of the wallet where they're holding the pooled funds for all of their customers. And the software in the background just adds up all the balances and checks that it matches what's in the Bitcoin wallet. And then the customers are able to verify that by putting their email address into a website and being emailed the balance that's stated on the file. So if an exchange is doing an FTX or a Mt. Gox or any of the others that we've seen over the years, Prime Trust is another one. If they have customers that are not represented by the on-chain assets, and that will show up over time as customers are putting their email address into the website and they're not receiving the balance they think they have on the exchange. And it just works because Bitcoin on-chain is auditable by anyone that has a public key. And we can ask them to send a message from the wallet, which would demonstrate that they have control over those funds, that they actually have the private key, and it verifies that they haven't lost the key or hasn't been hacked or stolen. So it's something that I think is going to take some time to get introduced to the exchanges, to the network, but the technology is there, and I think it has real value. So over time, it should be something that people will perceive to be way of because people talk about proof of reserves, as being showing the wallet and say, okay, there you go, that wallet's got 100,000 Bitcoin in, but how many customers have claim over the 100,000 Bitcoin? It could be customers that think they have 300,000 Bitcoin, and there probably are multiple custodians or exchanges that may have had money with Celsius because they could earn a 20% yield on it, or they thought they could, and it turned out that they were the yield. They were not a customer.
Yep.
And there's no system for anyone discovering that they've lost control of the assets that the customer's entrusted with them. So that's what it really is. It's just it's a system that if exchanges adopt it and they become the network that controls it ultimately. So that they can then advertise the fact that they are CDR registered, that they have entered into this agreement with other exchanges where they're going to be verified, and the customers just play that role as a decentralized auditor.
Okay. So is that kind of like using multi-party compute then to verify the values without actually knowing what they are?
We basically encrypt the customer's email address. So the file that's sent to the CDR is encrypted email addresses with balances. And then when the customer puts their email address in, it's encrypted in the same way and is matched up against the balance, and the balance is sent to the email.
Okay.
So,
Code has put his hand up very nicely to ask a question.
Yeah, why email?
because that's a way of protecting the customer's information. If we email them the balance, then I can't get your email address and go onto the website and put it in and see what your balance is. All that would happen in that scenario is that you would be emailed the balance, and you would know that somebody is trying to find out your balance. Somebody who has your email address.
Yeah, sure. But emails can be intercepted, yeah, as well.
Emails can be hacked. This is a reality. No system is perfect. I mean, we all depend upon email security for any number of applications that we use. There's multiple things where you can always do a forget password and retrieve somebody's password if you've got access to their email. So, yeah, I mean, it's not a perfect system, but it's far better than losing your money to Sam Bankman-Fried.
Yeah, that I agree. Totally, I'm with you on that.
Sorry, Code put his hand up, so...
That's okay. Don't worry, Gary. We're in a small group. I'm sure we'll get around to it. So, Simon, it sounds really interesting. Couple of questions for you, just based on actually what Jay-Z just said. It almost seems like you need a second layer to actually transmit the messages over a blockchain of some description, so they actually arrive in your wallet rather than your inbox. Anyway, but that's a conversation for another day.
I mean, there is an answer to that one. I mean, this system is really designed for people that don't actually have an on-chain wallet. The reality is that everyone should be self-custodying, and it is the case that, if you don't do that, then you don't really own the assets. But what overwhelming numbers of people are doing is leaving their funds on an exchange, because that's just easier, because we're used to this custodial relationship that we have with the banks.
Yeah.
So it's a system that's trying to be pragmatic, without saying the fact that people are holding their assets with custodians and they are being stolen. So how do we try to find a verification system for that? So if a customer's got enough technical ability or enough perseverance to set up their own wallet, then they probably don't need to be leaving things on an exchange anyway. This is more for customers that aren't really going to that level of technical ability or I don't think, I mean, in reality, to store your coins on chain, you don't need technical ability. You need a commitment to doing it and spending enough time figuring out how to do it. That's the reality. And it's, in many ways, it's like learning how to drive a car. Anyone in the world can learn how to drive a car, but it takes a long time to do it. And it's a process, and that's what self-custody really is. It's a difficult process. And if you drive a car and you get it wrong, then you could kill yourself or kill somebody else. If you self-custody your assets and you get it wrong, then you could lose your money. So it's actually much less dangerous than driving a car, but it may be equally as useful in the future.
I agree. My question actually was about the origination of your idea. Was this something that that you recognized, like in terms of research in the market, you realize that there's a need? And where do you feel that need is coming from? Is that coming from exchanges primarily, or is it more coming from the user's standpoint?
I think it probably emerges out of my complete lack of trust of the financial system. I mean, I've been a trader for nearly 20 years now, and I was in Refco, if you heard of Refco or MF Global. I mean, those are brokerages where they lost customers' money. They were gambling with customers' money and they lost it. So I've had multiple experiences of custodians not looking after people's money very well. We actually started building it in August last year. At that point, most people that heard the idea said, well, your exchanges will never accept that. So that's probably not a good idea. But after FTX went down in November, there was a general sense of, we actually need this. That's actually a really good idea. So I think, a lot of people don't recognize the amount of trust that's actually put in exchanges and custodians. It's a huge amount of trust, because there is no verification happening right now. And when FCX went down, there was a big knee-jerk reaction, and everyone talked about proof of reserves. But in general, the industry has kind of resigned itself to the fact that there is no way of verifying liabilities. But, you know, I mean, I can see ways that you can't 100% verify liabilities, but if customers are willing to pay a role in terms of do that checking, you can get to a very high level of confidence about which exchanges are holding assets correctly and which aren't.
Very interesting. Thanks, Sam.
I guess you've still got the interesting thing of where technology and real world intersect, but they don't always come out too happy. That what you're demonstrating is a verifiable proof that the crypto asset exists. However, someone could have like a first charge notification on it, something that they could have effectively put that crypto up as secured collateral. So there could actually be a legal charge against it, which you would still not know about. Now, admittedly, most companies who are offering loans against crypto, they do it in a way where it goes into an escrow account or something where it's separated off. But I think there have been some cases where people have actually put a legal charge against the crypto, and there's no way of knowing that exists. It's a bit like
the legal side of it is an interesting one. Our solution today is that the message that the owner of the private key sends is a statement that they attest to the fact that the assets are owned by the customers in the file. So we take the hash of the file and put that in the message, and we also have them say that they recognize that should customers ever demand those funds and the wallet in question doesn't deliver them, then they accept the fact that exchanges will treat those funds as being stolen. So in the way that happens at the moment with the exchange network, if there is a big hack, exchanges prevent those funds from being cashed out into fiat. So whether or not we can get the exchanges to come on board with that is still a question, but certainly for somebody to actually sign that message and you know, I mean, if you owned a big crypto wallet and I was running an exchange and I said to you, please could you pretend like your funds are the customer funds on my exchange and send this message with your wallet, how much would I have to pay you to do that? You know, I think you really are kind of asking for trouble if you do something like that, you know, because you've made a statement that your funds are owned by the customers on this exchange. And the fact that I'm asking you to do that means that I've already stolen their funds. So it's going to be a difficult thing to get people to kind of make that attestation with funds that they're not willing to lose. You know, I think that's the thing, really. It's and again, it's like there's no 100% proof on these things. You know, it's a level of confidence, and there's a lot more comeback with this system than you would have with any exchange or custodian as they are right now.
And it's certainly something that it's a growing opportunity as well, because you look at a lot of regulators now, and you look like banking requirements in the Isle of Man, not just for crypto but fiat, about the requirement to have segregation of funds and evidence of separation and all that kind of thing. A lot of that stuff is beginning to come into the crypto world as well. It's going to be interesting that we definitely need ways of verifying it. You've mentioned proof of reserves as being one way. I think that, you know, that's something that certainly some people are looking at with some issues. So I think there's definitely a growth in this area. So yeah, interesting stuff then.
Yeah, it's a problem that needs to be solved. You know, we don't know exactly how that's going to happen, but at some point it has to be fixed.
I totally agree with everything said. I only have my problem being a security guy. My problem is with email. That's all, you know. I'm not saying go the world coin type of thing, because for me that stuff is quite a problem. But a mix of ZK and I'm just trying to think, you know, what would be the best way to solve this ZK and some biometrics of some kind. Probably is the way to go. Otherwise, you know, the emails, I'm not a fan of that, you know.
I mean, we're using the email because it's simple for the customer. That's the real thing. I mean, any proof. I mean, I've got an account with Kraken, and they're doing a proof of reserves thing with a third-party auditor, but it's a pretty complex process to go through, and it gives me no confidence whatsoever when I go through it. So it's trying to create a system. I mean, the idea is with this that each of the exchanges or custodians becomes a node in the network, so they're all providing a website where you can check on any one of the other exchanges. You know,
I was thinking maybe I don't know if you guys explored this, but maybe You have to connect to wallet, obviously, but if you don't connect, you can actually do something quite amazing with biometrics and Web2 users that don't understand Web2 wallets.
Yeah.
All of these things that we have to have, and Gary mentions many times, users shouldn't care about there is a wallet, there is a blockchain behind. It's just very simple for them, some sort of biometrics and then encrypt it. All that
I've got no intention of going down the biometrics route.
No. Okay.
If I was to come across one of those WorldCoin orbs, I'd probably want to smash it. So
yeah, I'm the same.
That's the side of things that I'm on. So yeah, we're not going to be doing anything like that.
I'm not a fan of giving your eyes to someone, if you know what I mean. But a way of encrypting it, putting on a IPFS, and only if you give out permission through maybe ZK to people to actually look at your whatever it is, then maybe that could be a solution. But even then, it's hard, because you need to make a choice. What type of biometrics are you going to allow? Eyes, for sure not. Voice can be tampered. It's a hard problem. So I understand why email for now,
Yeah, nothing in crypto is easy. This is the reality. We're all there.
Yeah.
We're all here and we're all trying to solve very hard problems. And the reality is, financial systems between billions of human beings, are very difficult to build. The one we've got certainly isn't perfect. We all know that. So everything that we're doing in this space is hard. I think the real trick is to try and make things more usable. And that's what we're focused on here, is the user experience. Because, at the moment, there's a lot of people that want to be in crypto, but they've got no real way of storing assets. I do self-custody, but I still find it very stressful, and I worry about I've written a word down wrong, and can I re-access my coins? And, the alternative is to leave it on an exchange where there's no real verification of the fact that they're holding my assets on a one-for-one basis, because their incentive is to use the funds to advertise their business and expand the business. That's the exchange model, that they can expand much more quickly. If you look at the rate at which FTX was expanding, it was very rapid. They were advertising in a lot of places. As long as people keep on coming into the scheme, then you don't get found out. It's only when people try to leave that you have the problems. So, the structure of custody in the crypto world right now is fundamentally flawed. And when these companies do go wrong, there's no way the government can bail them out, because Bitcoin is a finite asset. They can't go and print more Bitcoin in the way they do when Silicon Valley Bank went down. Everyone was made whole because the Fed just printed a load more money. That's the problem with the existing system. So Bitcoin is very hard to store. This is the reality. You can't comfortably store it anywhere. And that is something that we need to try to create a better user experience of if we're going to get mainstream adoption.
Yeah, it's interesting as well. One of the things I keep stressing, people keep talking about how we need to improve user education around crypto, and I keep saying no, we don't. What we need to do is we have to start educating the technology people into making things easier in the first place, so that the people coming into it don't need to understand it.
In 1990, if you wanted to send an email, you had to be a Unix programmer.
Mm-hmm.
But now anyone's mum can do it. It's so simple. It's such an easy user experience now, and that's how you get these things adopted. Is by making it so simple that you don't have to understand crypto to use it.
Exactly.
Everyone will use it.
Yeah, but if it's easy to use, it takes less effort than existing things, and it's secure, reliable, and trustworthy, then you've generally cracked it. But that's why I always find it funny when you get people who produce like 40-page user manuals for a simple to use site. It's like, well, if you need a manual to explain how to use your site, it's not simple.
No one's going to use it.
Well, the user experience I keep talking about is because I think that we've got several people on the call here in London. Is you think about TfL's Oyster card or Touch to Pay or going on the tube in London. At no point was I trained in how to touch in and touch out. It just said up on the wall somewhere, touch in, touch out. That was the extent of the training. And it's really easy to get on a train, off a train, and pay and everything. That's as simple as it needs to be for crypto, really. So we're a little
Even
way away
difficult
from
about
it.
that. I mean, that was hard at the beginning because you had to go on the website and register your bank account details and put some money into the card. You had to set up an account and everything. But now you've just got your debit card or credit card and you scan that. So that thing has simplified massively from where it was at the beginning. And, that's the way all these things tend to progress, is that over time, people just figure out ways to make it easier for people to use.
Well, I think that's where the likes of like Google Pay, Apple Pay, Revolut, all of these kind of things, where you've got an app on your phone. At the moment, a lot of that is an app on your phone that allows you to transact with fiat. There's no reason why it couldn't allow you to transact with crypto. There's no real difference between the two of them in terms of behavior of how they work. So
yeah, I mean, Revolut let you hold crypto within your account now. I don't know if they've actually got any real crypto backing up those holdings that people believe they have on the screen.
No,
You can't transact with crypto on Revolut, though. That's the thing. You can't use crypto to pay for something. That's where Lightning's coming in now, isn't it? You've got the Lightning wallets where you can go and just scan a QR code and make a payment at very low cost.
Yeah, and that's the thing I keep emphasizing to people with Revolut. Revolut may be a very easy way of looking as though you're paying for things in crypto and that kind of thing, but actually you don't actually own crypto with Revolut. You own the right. You own the rights of access to
it's an IOU, isn't it? Yeah, they don't hold the assets on chain. That's exactly the kind of thing that we're trying to fix with CDR, is the fact that there's a whole lot of bucket shops out there. The bucket shops have actually existed since the 1920s, when people used to trade shares through what they called bucket shops, where they would give you, a piece of paper that said you owned a share, and in reality, all they were doing was selling you an IOU for that share. So when they got caught on the wrong side of a move, they would actually go bankrupt, and everyone that thought they owned the shares would lose them. And in reality, I mean, I don't know what's really going on behind the scenes with Revolut, but chances are, you're buying an IOU through them. You're not actually buying any real Bitcoin, and they're not really holding any Bitcoin on chain because it's much simpler for them to just take the risk on their own book and do it that way. I mean, maybe they've got a futures account. Maybe they're buying Bitcoin futures that hedges their future.
They'll certainly be doing that, but they'll have a treasury management capability to manage their risk and exposure, definitely. But I remember going through the small print once to actually verify it, because I do things like that sometimes, and it was interesting that it came down to the fact that you don't actually own. It's the sort of thing. If you don't have the private keys, then you don't own the crypto.
That's it. Not your Ponzi scheme.
Yep, exactly that. So with that, that's really interesting discussion on that. We've been chatting for a while. Don't know if anyone's got anything else they want to add or any questions at this stage.
I only have a little comment. Simon earlier said that the self-custody in crypto is fundamentally flawed. I just wanted to say, I think it's more politically correct to say it's in its early stages of development. Do you not think so?
Yeah, I mean, self-custody itself is not flawed. It's people that are flawed.
Okay.
If we were all willing to devote the time to learning how to self-custody, then we would all be able to do it. But it's a difficult process in terms of it's not something that we've ever done before. And it is a question of self-responsibility in terms of getting it right. You are taking control of your own assets. And it's a slightly scary experience. I mean, I do self-custody, but when I'm creating a new self-custody wallet, I put a small amount of money in it. I do multiple transactions out of there to myself before I put any large amount of money in there, because that proves that I've actually backed up, the seed phrase correctly and established a recovery process, because any number of ways it can go wrong. So, I mean, self-custody is the ultimate use case of Bitcoin, in the sense that your digital money, your digital pounds or euros, they're held within a bank, and you can't take the digital money out. You can only transfer that digital money within the bank to somebody else. And cash has virtually gone now in terms of, people using it in real life, in terms of, going to the supermarket. Very few people use cash now, and that trend is going to continue. So we will all be beholden to the banking system who has our money. And that's what crypto is really there for, is to say, okay, you can actually make a transaction between human beings without needing to rely upon a banking system that may at some point in the future choose to exclude you.
It's interesting you mentioned about cash, though, because I followed that with some interest. And the last report I saw for the UK was actually, it was bucking the trend, and the use of cash was increasing a little bit. Now, I know that the previous time I saw that come out, it was actually a bit of a red herring, because it was actually a release that was put out by the post office to say that they were seeing an increase in cash transactions. But that was simply because what people hadn't realised is that loads of banks have been closing their bank branches. The post office has got an obligation to continue to provide cash services. So the reason the amount of cash going through post offices was increasing was simply because there was nowhere else to go. And so it looked as though the numbers were going up. But I saw a report the other day that in the UK, the use of cash has actually increased a little bit, which was curious, because otherwise I was expecting it to continue tailing away. So we'll see where that goes and see if it has any impact on the Bank of England's work at the moment around the digital pound as well. So they're running a 2-year project on that, I think it is.
The interesting bit is, I think it's not going to be just the UK. We actually discussed that probably a year ago, Gary, about CBDCs as well, is that Germany is going to be an interesting case, because the cash economy, still about 68% of people use cash. No credit cards, just cash. So, yeah, there's many countries around Europe that are quite similar. So it's going to be very interesting to watch.
Yeah, and that is an odd one, because usually you tend to assume that everywhere else it is at a similar kind of level, but actually that's not always the case. So yeah, it's an interesting one. Just to go quickly, while we were chatting about that, I just thought I would actually find it was actually the 14th of September. It was UK Finance put out a thing to say that people are actually turning back to cash at the moment, and it seems to be simply because it allows them to budget and that kind of thing. But some of the people I've spoken to, so they actually prefer digital cash, because the banking apps these days give them access to all sorts of clever analytics and that. So we'll see. Yeah. Cool. We've got about 15 minutes left. I don't know, did anyone go to Singapore last week?
I did.
Yeah. Come on, tell us all about Token 2049, or did you just go and watch the Formula One?
I ended up actually being in a few places to watch it, but it was just by chance. I didn't even had a plan to do it. But if you want a crazy week, that's the place to go. I mean, there was a spreadsheet that I looked at before the event, 350 events,
Wow.
apart just from the main event. Actually, side conferences, even entire 2 days conference, 1 day conferences, all running in the same week. It's just crazy, pure madness.
Do you think it's going to be the same? Because you got, is it Dubai is the next Token 2049 conference?
Yeah.
Do you think it's going to be similar on that?
That's week. It's going to be 50% smaller. So I was talking with them already. They're going to do it 50% smaller than this one to try first, and then let's see.
Okay, because that's, I think, is that in November?
No, it's going to be the date that I've heard is April.
Oh, okay.
Well, could change between now and then, but I think that's tentative date. They already start to sell tickets and everything.
Okay. Well, definitely want to watch it. So, what were the key points? Anything from a crypto point of view? The
usual stuff. I mean, the usual stuff. Almost, you could see pretty much almost everyone was there, including Vitalik. I ended up spending 10 minutes with him talking. And since Imperial College, December 2019, I didn't see him. It's very interesting what some of the people are talking going forward. Some people are a bit afraid of the Ethereum ecosystem. that it could collapse. I don't think it will, but who knows?
Okay.
But in general, look, I didn't see Binance there at all. There was 2 or 3 people from Binance, but I mean, they didn't have a presence. BNB Chain, yes, they did an event there, but the rest, they were quite quiet there. Quite unusual for them.
Okay. Well, what was the main kind of, was there a particular theme that was riding through? You think about how you have DeFi or NFTs or ICOs. Was there anything
Not really.
in particular?
No, not really. It was a mix of everything.
Okay. Because I always think it's usually these big conferences. Yeah. Go ahead. Sorry.
It is a place to go. It really is. Because anyone that you want to find in this space, it is there pretty much. I've seen all the big boys from the big funds, Coinbase at Coinbase House for 2 days. Republic was there. Almost there. Everybody that you can think about, they had a presence there.
Okay. Yeah, it's definitely one of those things. But was it on at exactly the same time as the Formula One? That didn't sound like a great idea.
Yeah, the town is crazy because then on Thursday and Friday to go to the events, it becomes hard, very hard, because you have to go. Either you end up taking the metro, or the taxis don't go to certain areas, and then if you want to go, you need to walk. I mean, it's madness, really.
And I guess accommodation becomes crazily expensive as well.
Yes,
yeah. I guess it's a bit like Davos for the World Economic Forum, and that it just gets prohibitive. Okay, so it's kind of interesting because
not as much as that. Really, nothing compares with Davos.
Okay. Yeah, but yeah, I was just curious to see if there was anything in particular that came out that was like newsworthy or anything that was worth talking about. Okay.
To be honest, I was not long in the main conference. We just went on the second day for about 3 hours, but the rest of the week is just going from event to event, meeting people, all this stuff. You make a plan and you go after what you want.
Yeah. Because it sounds more and more like one of these events where you don't actually go to the conference itself; you just go to the side events.
Yeah. So the content, I don't see many people interested in the content. They just go there to connect and make partnerships or investment or help of some kind to try to move forward with whatever you're trying to do, whatever is your objectives. But super interesting.
Yeah. Were there any big announcements on the regulatory side of things? Because the Monetary Authority of Singapore is quite active on crypto. Were they there talking about anything?
They were. I was just not there in the conference.
Yeah.
That happens on the first day, usually the first morning, But I'm sure if you go through what happened last week, you'll find it. But I was just not there, so I'm not aware.
I'm sure there'll be loads of write-ups in City AM and that kind of things. James was out there, wasn't he? So I'm sure there'll be stuff appearing in the next couple of days when he gets back to the UK. So that'll be interesting. Okay, well, thanks for sharing that, JT. Anyway, they're always interesting. Right, we've got 10 minutes left. So, okay, again, opening it up really. If anyone's got anything else that they want to share or any questions or anything, now is a great opportunity. Because if there isn't, then we can close off early for the day.
We could.
We could. Well, there we go. Well, on that basis then, because I think we've exhausted the main stuff that's going on. I haven't heard anything particularly interesting, newsworthy or anything. So what I was going to suggest is that we'll finish a few minutes early for the day. And I'll thank everyone for coming along today. And hope to see you again next week or a future session.
There's one thing. There's one thing. There's always one thing at the end.
Okay.
Coinbase got a license from Spain for running an exchange, which is super interesting. I almost forgot that. I can actually send you the link.
Okay. Interesting country to do it through.
Yeah, that's what I was thinking. Very interesting. So,
John, if you got a link, and I'll pull that up then.
Yeah.
So it's normally Elena who does the just one last thing. So it makes a nice change. But then
nice.
Yeah, JT usually waits until the last possible minute and then throws some real absolute interesting one in. Okay, so Coinbase registered as a crypto exchange and wallet provider with the Bank of Spain. Okay, so
I wonder why.
I don't know. Maybe we could have Gabriella. You're in Madrid.
Yes.
Have you heard about this with Coinbase?
Yes. Mm-hmm.
I was
Yes.
just curious about why they've chosen Spain.
Mm-hmm.
Okay, well, research shows 60% of Spanish citizens motivated to buy cryptocurrency.
Mm-hmm.
Do you think that's right, Gabriella? Do you think 60% of citizens even know about cryptocurrency?
I don't know exactly what 16 is. I don't know. Poof.
It seems very high.
Mm.
I wonder if that's just 60% of those who know about crypto said that they were interested in getting into it. So, okay, curious one. Thanks for sharing that, JT. Then.
Thank you.
Thanks, Gabrielle. Okay, right. Well, with that, then, unless anyone's got anything else to throw in, I'll wish everyone a great day, great evening, great morning, depending upon where you're in the world. Thanks for joining. Come and join us again. Have a great day. See you all.
Thank you. Bye.
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 Bye bye.